Hi everyone, my name is Piterpakulski. Today we will continue building financial model of a customer behavior business idea. So let's imagine that we have some business which contains different types of customers. So some types of customers stay with us for example, for several months. Some of them stay with us for a year, and other types stay with us for 3 years. Other types of customers may make just one purchase and then quit. And we are creating different portraits of customers inside this model, and then all this data consolidates into cash flow statement and shows us the simple discounted payback period if we are switching on and off different types of customers from calculations, if we are adjusting the life cycle of this or that type of customer. We can adjust the revenue algorithms or direct expense algorithms for this or that type of customer. So we can play with these inputs the way we want. And today we have a very interesting task. So we need to build some block inside the model, and later fixed costs, investment plan, payroll will be linked to this block. So the idea is, if we adjust, for example, if we start playing with the sales plan with the amount of new customers, or we would like to displace the start of operating activity of our business idea, all investment plans, all payroll, all fixed costs will displace automatically, so we won't do it manually. And that's why we will avoid different types of mistakes. So this will be our today's exercise. Guys, like, share, subscribe as usual. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video, I will give you the link to the playlist where I will be keeping all these tutorials. And when I completely finish this model, I will give you all the links in the description of this video as well, so you will be able to watch all tutorials from scratch till the final overview absolutely free, one by one. So first of all, let's very quickly run through what we did before during our previous videos. So we have a rule in our model that all our inputs are colored with this blue color. So if we will be playing with inputs, we will be playing only with blue cells. So this is our rule. We are not touching other cells because they contain formulas. So we're not putting the data inside cells where formulas are. So first of all, we are setting up the first year of our projections. So we have a 10-year horizon in our model. So we have 6 types of customers. We can switch them on and off from calculations. We can set up the duration of the life cycle for each type of customer. We have global and local coefficient for the revenues. So if we want to increase or decrease the whole revenues, we will be using this coefficient. If we would like to play with the revenues for specific type of customer, we can use this local coefficient. So if we would like to increase the revenues on 30%, for example, for the first type of customer, we can do it here. So everything is very simple. So we have global and local coefficients for the revenues. We have global and local coefficients for direct costs. we have global and local coefficients for the amount of new customers that will be joining our project. Then we are, so here from left to right, we have the life cycle, the maximum of life cycle. So the maximum is 10 years, we have 120 months. And we are specifying monthly revenues for one customer representing each type. Here it is. So these are the revenues per customer per month for each type of customer. Then we are doing the same for direct costs. So here we're specifying direct costs per one customer per month for each type. Then we are specifying the amount of new customers, only new customers that are joining our project at a specific moment inside the timeline. Then we are calculating direct costs per existing customer. So we are setting up the level of expenses per customer or per total amount of customers. We can switch on and off this type of expense. We can increase or decrease this expense globally and locally. Then we made an assumption that we may have some direct costs that are linked to the amount of new customers, not existing customers, but only new customers. So here are the value per new customer. These are on-offs. These are global and local coefficients to play with this type of costs, type of direct costs. And now we will start creating a new block inside our model. So first of all, let's call this block timeline of the project. Okay. So first of all, we need to put a little bit closer the line called the amount of new customers. We already calculated this value. Let's go up. So here are new customers. Here are new customers plus global and local coefficients. So this is the total amount of new customers with coefficients, local and global coefficients added. So these are new customers. Now what we need to do, we need to so this will be the line, we will call this line operating activity 0, 1, 1, 1. So 0 means that we don't have operating activity at this moment. 1 means that we do have an operating activity at this moment. So if this value is more than 0, let's put 1, otherwise 0. This is the formula for the first month. Then we will be using if and function. So if this value equals to 0 and this value equals to 0, we will put 0. Otherwise, then we are modeling the second scenario. So if 0 and this is more than 0, we will put 1, otherwise 1. Now we are closing all the brackets and extrapolating this formula to the right. So now we need to find this moment, July 23, and this will be another line. This will be 0, 1, 0. So if this value equals to 1, we will put 1, otherwise 0. And here the formula will be a little bit different. If this value equals to 0 and this value equals to 1, then we will put 1, otherwise 0. And now I'm going to extrapolate this story to the right. So this is the moment when we start counting fixed costs and payroll. So for example, if I want to, so now it starts in July, I can go up, for example, I can add a couple of customers here and here, for example. Now I can go back. And now I see that our project starts in May. Then I need to start counting the months of operating activity. We will also need this line later for costs for payroll, for different types of direct costs, for operating losses calculation. So we also need this line. So we need all these lines for future calculations to use it as a guidelines, let's say, we will costs to these lines, and all costs will be displaced automatically. So this will save a lot of time, and we won't displace our project manually, so everything will be linked. So that will be great. I will show you later. So now we are counting months of operating activity. Then we will the next line will be end of investment stage. So this will be 1 month prior the start of operating activity. Here it is. this is the operating activity start. This is the end of the investment stage. Now we're extrapolating this formula to the right. Now let's count investment stage backwards. We will be linking investment plan to the next line that we will be creating. So next line will be 0, 1, 2. So I will start at the end of the timeline. So if this value is more than 0, we will put 1, otherwise 0. So if this value equals to 0 and that this value equals to 0, we will put 0, otherwise the next condition. So if this equals to 0, this is more than 0, we will put 1, otherwise we will take previous value plus 1. Now let's extrapolate this formula from right to left. So here we can see how we are counting months over the investment stage. Now we need to so let's create operating activity start. So I will create this block. Here I will place year and month. So operating activity start, this will be year, activity start. So I will take operating activity, I will take this line and multiply it on this value. Now I'm going to extrapolate this formula to the right. Now I'm going to create totals for this line. So this will be 2023. Now I need to do the same story for month. So this will be month. For that purpose I will add here month number. So January is the first month, plus 1. So now I will write the same formula for month. So I will multiply this value on operating activity start 0, 1, 0. Now I'm gonna add totals to this line as well. So this will be month number 5. This is May. And what I will do, I will add these months here. Let's extrapolate it. Now let's go back and we will be using a very simple VLOOKUP function. So I will be searching for this value. I will be searching this value in this table. I will need the second column and exact match. So this is May, and then May travels here. So what we are fighting for? So we will be linking all the payroll, all fixed costs starting from May 23. For example, if we go up and we suddenly decided to, for example, start our project in October. So we decided to set up zeros here. Let's say 10, or for example 300. Let's say that's okay. We have some. Okay, let's do the following. New customers. I will copy. I just created some amounts of new customers in this block. Let's copy these values, paste them as numbers. Okay, so now for example I want to start my project from September 23. Now I will go back. I can see here September 23. So September 23 is here. Operating activity starts counting 1, 2, 3, 4, 5. I will be linking cost to this line. I will be linking fixed costs and payroll to this line. Then I will be linking investment stage expenses backwards from September 23. Here we can see counting backwards. So this is the start, this is the end of the investment stage. These are investment stage counting months backwards, So now I will be using this block of formulas to link many types of fixed costs, many types of payroll costs. So for example, I will be linking, if I want to displace the project to July, let's go back. We can see July here. So July is the month when we get the first customers. So we are counting backwards investment stage. We are counting months of the operating activity stage here forward. This story of the investment stage is counting backwards. So this is very important block of project which we will be using for future cost allocation. So guys, please like, share, subscribe. You can always order financial models from scratch for your unique business ideas. We can help you with that. At the end screen of this video I will give you the link to the playlist where I will be keeping all these tutorials. And when I completely finish this model, I will give you all the links in the description of this video as well, so you will be able to watch the whole process from scratch till the final overview, absolutely free, video by video, tutorial by tutorial. So thank you guys for watching. See you in next videos. Thank you and bye.